All right, hello everyone. It's Tim Davis coming to you guys with a market review, and it is now Saturday. And today is Saturday, April the 20th, 2024. And I want to start off this week since we are well into the month of April. I want to start by looking at a monthly chart of each major index to show you guys what is starting to transpire and what the overall market action is starting to show us. So what I want to point out is, first of all, each one of these monthly charts, they are starting to show that a pivot point is definitely transpired. So that's when the market gets up to a certain point, and then we start to pivot and go the opposite direction. So as you can see here, the past several months, each one of these candles represent a month. This is the Dow Jones we're looking at. Past several months, we've been trending higher. 1, 2, 3, 4, 5 months in a row until we get to April. And then it looks like we are starting to reverse and go the opposite direction. How long could this reversal take place? Well, we were pretty much in overbought territory on the monthly chart. Look at the RSI down here. We were in, RSI was well above 80. It was well above 70. It was close to 75 on the monthly chart. And the daily and the weekly charts were also overbought at some point during a time frame. So when the monthly chart also got overbought, we can definitely start to see some type of reversal. And that's what is starting to happen. Now we have the monthly chart showing that the RSI oscillator is out of the overbought territory and starting to trend lower. But what else does the candlestick show us? Well, the candlestick is showing us that right now, as of April the 20th, there's this huge red candle. So right now the month has really been taking a toll to the downside. So the bears have been in control. But what makes me really pay attention to this is that we're starting to see a red candle engulf these two previous candles. That is a huge bearish sign. And what I consider an engulfing, when a candle engulfs a previous candle, is I always only look at the body of the candle. So here's the body, top of the body of the red, this red candle and this green candle. Here is the bottom of this body of this green candle. This red candle completely engulfs the body of that previous candle. But not only is it engulfing that one on the Dow Jones, it's also engulfing the previous month. So March and February completely been engulfed. That is a huge bearish signal, folks. So that's something to cause you to be very cautious moving forward if you are a straight bull, because the bears look like they're in full control right now. So we got a bearish engulfing candle that's engulfing the previous two candles on the Dow Jones. That is a pivot that's showing us a definite pivot in the month of April. How far did we go? Well, let's draw some Fibonacci on here, but I'm gonna do that. I look at all major indices first. Let's get rid of this. So that's what, oh, sorry. So that's what the Dow Jones looks like. Let's look at the S&P 500 monthly chart. And I already have Fib don't join us. I've been doing some weekend analysis already. But looking at this one, as of right now, it's just completely engulfing the previous month. So the month of March, that candle is completely engulfed by this red candle. And I still think there's a lot more downside, especially to the Dow and to the S&P and to the NASDAQ, which I'll show you in a second. And this is going to be a big week coming up with earnings from some major players, as well as some more economic data that's coming out later in the week that could really could be a telltale sign for overall markets by the end of the week, where we end up at. So again, big red candle for the month of April. I just have the faintest doubt that this red candle would be erased by the end of the month and turn green. I just really don't believe that that's going to end up happening for these major indices. I think we are definitely at a pivot point where we could continue to go lower for a few months possibly. All right, that is the S&P. Let's take a look at the NASDAQ monthly chart. Here's a NASDAQ monthly chart. Again, looking at RSI, we are definitely out of overbought territory on RSI. And here we've just about engulfed two, we have engulfed two previous candles. So the month of February here, the month of, so the month of February here, month of March here, April here, and completely, you see, both of those candles can fit within that red candle, meaning they are being engulfed by that bearish candle. Complete bearish signals to me to warn of caution, just to be cautious, because it looks like we have seen a pivot point. And normally when in the past, when we've seen these pivot points like this, when the bears start to take over, especially on the monthly chart, it could last for a month or a couple of months. As we've seen back here, this is the NASDAQ. As we've seen back here, we had 3 months in a row of downward trending months. And this one starts off with a big red solid candle. So I do think we are in a downward trend now. That is our NASDAQ. And let's take a look at the Russell. Russell, same here. Previous 2 months are completely being engulfed by this red monthly candle for April. So we are at a pivot point, folks. Last time we had a pivot point with April, with the Russell, when we seen a straight pivot point when the bears took over, we were down 3 months in a row, and that was back in August 2023. August 2023, all the way down to October 2023, 3 red months in a row. So what happens here? We have to wait and see. I do think this is a strong movement down. So anything is possible from this point on. All right. So now that we see that we have completely pivoted from a bearish scenario to a bullish, from a bullish scenario to a bearish scenario in the near term. Let's look at some of the here and now. And since we're on a Russell, we'll stay here. All right. All right, first of all, let's go to a weekly chart. I'll show you what some possibilities are. So what I did was I drew a fib tool on the monthly charts. Since the monthly chart is pretty much starting to take over and show you which direction we're at. So I did a fib retracement on the monthly charts. All right, trying to trace this movement here, or seeing how much of a retracement can we get from the lows that we saw in around October of 2023 to the highs of April 2024. So I started my fib tool from the highest point that we saw before we started this downtrend, which was back in October of 2021. So I drew from that level to the low of October 2023 to the high of 2024. So I might have to redraw this one. It's a little off. So we're going to redraw this one. So I'll move that. So from the high to this low. Oops. Oh, I drew the wrong tool. Use the wrong tool. Move that. I switched this to my fib width extension. So from the high point to this low point of October 2023, to this high point here of 2024 when we first started to pivot right here. All right. So this could give us some type of inkling of where we could find some support, temporary support in the near future. All right, so now let's switch to a weekly chart. So as you can see, we hit that first 23% Fibonacci retracement level. And another thing I want to point out too here, too, folks, if I can pause this for 1 second and switch to another frame. Something else is very, very critical to pay attention to. All right. Let me switch to a daily chart here real quick. One thing I wanted to point out is another thing we got to look at as a bearish signal. This is the Russell. 20 per moving average here is my blue line. This purple line is my 50 period. We are starting to see a cross of the 20 period crossing below the, 20 per crossing below the 50. That is a definite bearish signal as well. Now we are hitting a level of support right around this 23.6% Fibonacci retracement level. So I do think we can see a move up in the Russell sometime beginning of the next week. But I don't think this 20 per average is going to cross and go back up. I think it's going to continue to go down even as prices start to rise a little towards the beginning of the week. And I want to see if I can see what happened the last time we had a cross on the daily chart. So last time we had a cross on the daily chart of this Russell, I'm going to point that out so you can see what transpired then. Last time we had, as soon as we had that 20 per cross below the 50, we see what happened from that point on. So we crossed that in August of 2023 last year. August of last year, when the 20-day crossed below the 50-day, you're seeing the price action of the market continue going down, and it started to use this 50-day as a level of resistance. You can see we bounced from it a couple times and continue lower. We didn't really start to see some momentum shift until the latter part of October, when we seen it break above the 50-day gapped up. And then that's when it started using the 50-day as support right here. So all to say that right after we cross, when we seen this cross last time, this is what happened. We got a market just continue to trickle down for over a month. So watch out for the cross of the 20-day crossing below the 50-day, because that could mean several more weeks to a month of selling pressure every time the market bounces back up to that 50-day. All right, so here we are now, about to get that cross. Well, pretty much almost just, I'm not supposed to say we got that cross on the Russell. That's on the Russell. And let's stick here for a second to show you that this is a daily chart. We are in oversold territory temporarily in the look at the RSI and the on the Russell daily chart. So we could see and we have right at a possible reversal pattern or possible reversal point right at the 23.6% Fibonacci retracement level. So we could see a little bounce here as it traveled to the beginning of the week. But what ended up happening is if this 20-day continue to cross below this 50-day moving average, it's going to act as a level of resistance. So if we do get a rally, it'll probably be short muted out, and then we'll probably come right back down. All right. So there's the Russell. And let's go back to our NASDAQ. It's our NASDAQ. Again, I already drew a fib retracement on this one as well. The NASDAQ has not yet had that 20-day cross below the 50-day yet, but I think it's coming. We are extremely close, as you can see here on this daily. We're extremely close. With the NASDAQ, we are in oversold territory, just dipped below it So NASDAQ could be a little tricky next week. And plus, I think there's some NASDAQ stocks maybe reporting. We could see the NASDAQ go down just a little bit more before it gets a bounce. We have to see how it works next week. But however, any bounces, folks, I don't care what bounces we get, they're going to probably be muted. We are definitely in a downward trending market right now. So any rallies will probably be met with some fierce resistance real quick, real soon. So don't fall in love with the rallies until you see these monthly charts start to show signs of a reversal, signs of a pivot point. All right. That's a look at the NASDAQ. Let's go back and look at the S&P 500, SPX. NASDAQ, right on at 23% Fibonacci retracement level. So again, we could start to see some type of reversal. Look how close 20 period is to the 50-day. Getting very, very close. We are in oversold territory in RSI. Doesn't mean we can't go deeper or oversold. So we have to wait and see how the week starts. We could start to bounce around a little bit here, get a little bit of momentum to the upside. But we're in a downward trending market. So don't fall in love with any bounces. The bounces could be strong, but the downtrend is even stronger. All right. So we took a look at the Russell. We took a look at the NASDAQ. We took a look at the S&P. And let's take a look at Dow Jones. Here's our Dow Jones, and look at the Dow Jones. Ironically, it already has a strong cross of the 20-day below the 50-day. So now we're going to start to see that this 20 per moving average is going to act as a level of resistance. So any bounce we get in here, it'll do probably exactly that. As market rallies, we won't see this 20-day curl back up. More than likely, we'll see the 20-day continue to come down. And come down, and the market will rally, hit that 20-day, and come right back down. That's what I expect to see, especially in the Dow next week. So be mindful and be aware of that. Daily charts are probably going to be met with some fierce selling every time we see a touch of price action on the way up towards that 20-day moving average, 20-per moving average. Let's draw a fib on here because I think the chance to draw a fib on here. So I'm going to switch back real quick to a monthly chart. Switch my tools out here. And for this one, I'm gonna measure from around about the highs of 2020. So let's get about October again, November, to the lows of 2022. So the highs of 2021, lows of 2022, up to the high 2024. Right about there. Okay. All right. So now let's go back to our daily chart. And voila, look at that. We are right at that 23.6% Fibonacci trace level. Look what's been happening over the past several days. It's been hovering at that level. So that shows you how strong these Fibonacci tracement tools can be, folks, if you use them properly. So we are hovering at the 23.6% fib level, and it looks like it wants to use it as a level of support temporarily. Look at the rise in volume over the past 2 days on the Dow. So that shows you that we could be setting up for a bounce. Look at the oversold. This in the RSI and the full stochastic and win percentage with the rise in volume here. Showing you right there, the rise in volume. A couple days in a row, Thursday and Friday, rise in volume. Stair step up. And so I get a green candle on Friday. So we definitely could see a bounce here. But look what's happening. We're getting that cross. So again, every time we get that cross of the 20 period below the 50, that 20 period now becomes a strong level of resistance for price action. Let's push this out a little bit. So if you look at last time when we got that crossover right around here, got that crossover, and we started to see price action just continue to trend downward. And this was back in August of 2022. No, was it? Yeah, August 2023, sorry. August 2023. And when we got that cross, every rally was muted. So we got across and price action, see price action just stumbling around here around the 20-day, 50-day, and come right back down. Up just around the 20-day, 50-day, and hovered around the 200-day and right back down until we finally got a break above all three, the 20-day, 50-day, and the 200-day, which is my red line here, and then we was off to the races. All right, so again, once we get this cross, folks, below that 20-day, below the 50-day, I would expect to see more selling every time we get a rally. Every rally will probably be sold until we find a pivot point where price action starts to really cross back above these major moving averages. All three, or at least the first two, 20 and the 50, cross back above those in a strong fashion, then we can start to see the bulls back in charge. But for now, the bears are in charge, folks. So don't fall in love with no rally. And the bears are just starting to become in charge. Look at all this selling pressure here. So all this selling pressure here is going to result in a bounce here because you've been down several days in the month on the Dow, and we do have open a gap here. So it's open gap. Do we rally back up to this point with this open gap? There's an open gap. It's a couple open gaps. An open gap here. There's open gap here. So do these open gaps fill next week? We have to wait and see. But this moving average is going to have to contend with this moving average that's going to be coming down. So we may hit this moving average immediately and bounce, or we may just bounce above it a little bit and get rejected. I do think this moving average is going to stand as a strong level of resistance. So pay close attention to the moving averages as price action starts to move on the daily charts, folks, next week. Pay close attention because if you're in this trying to take if you're in a position trying to take a bullish bounce within the sectors, be mindful that when you see price action start to run into that 20-period moving average, if it gets to bounce on the daily chart, be very mindful that we could be in for a strong reversal. And any reversals at this point is probably going to take out these lows. So next reversal point, probably take out those lows. Boom. Right back below those lows. So that's something to pay close attention to, folks. Food for thought. And one more thing I'll take a look at. This is you'll get an overall thesis of what the market could show us next week. Let's take a look at the VIX. All right, and with the VIX, we see that big red candle on Friday, which leads me to believe that we could see, again, and here's a range that I ended up finding in the VIX that is going to act as a strong level of area that the VIX will see some support. So this strong red candle popped up and sold off. We right back to a level of support. So we could see the VIX go back a little bit below 18 at the beginning of the week next week because it is in over territory. This is daily chart. But look at the I want to point out something, folks, on these longer term charts. Look at a weekly chart of the VIX. The weekly chart shows an overbought territory. So I do think again we could pull back a little bit. And look what happened when the VIX hit that 200-day moving average. It sold off, hit that wick. Hit that 200-day moving average, which means that this was a full body candle, folks. Then it sold off last week, came all the way back down to a level of support right around the $18 level. But needless to say, with the VIX, it looks just the opposite of some of the others. So, and major averages. Look at what's happening with these moving averages. Look at the 20-period moving average down here. It's about to cross up over top of the 50-day on a weekly chart. That is a huge bullish signal, unlike what we see in the major indexes. If you look at a daily chart, it is straight bullish signals is popping up on this VIX. we have gotten the 20-day that has now crossed above the 200-day, as well as the 50-day way back here somewhere. So across above the 50-day, and the convincing matter way back here. So we got to cross above the 50-day back there. Now we cross above the 50-day and the 200-day. And now what's happening is the 200-day, I mean, the 50-day, like it's about to cross above the 200-day. We see that next week on the VIX. Folks, we can see a sustainable rally on the VIX. So let's take a look at a VIX monthly chart. See what that looks like. See if that looks bullish. And what do you know? It does look bullish. So like it's just getting off the launching pad. So we see how on the monthly chart, the VIX has just been getting hammered down here for quite a bit. But it's been bouncing off the bottom. So it's been bouncing consistently off this level of support area until we got to April, and we got a huge bounce. And that's what we contended with now. And this is the first time that you look at the Williams percentage, and it's got a huge move up in an oscillator. And the RSI, huge move up in an oscillator. Haven't seen a move like that probably since about a year ago, if that. Look at the TTM squeeze on the monthly chart, starting to show some positive momentum. So, folks, the markets could be about to see several months of selling as a possibility. So keep that in mind, folks. Hopefully this is some information that you guys can use. Until the next video, Tim Davis signing off.